been an explosion of companies over the last 5 to 10 years that have been backed through venture capital. Many of them, on the day they took that venture capital, believed they were going to build the next great, billion-dollar plus startup. The venture capitalists believed that, and everyone kind of gave it their best effort. Right. But where we find them today is it didn't play out the way that everyone thought it was. And so that may be because of things under their control or not under their control. There's kind of a whole gamut there. But my question to you is, given the model that you've employed, do you think that there is a opportunity to go get the previously venture capital funded businesses that didn't scale to those billion-dollar companies and start to actually kind of wean them off the dependency on venture capital and push them into something that looks more like I'll call kind of a tiny business, meaning the businesses that you guys normally look at? Like, can you transition, or is it once they've taken the venture capital, no matter how badly it goes, it's kind of a fatal shot and they can't transition back to a sustainable business model?
I think it's like drug addiction, right? So it's like heroin. You shoot heroin a couple times. There's people who get out, and then there's people who just they unfortunately don't do well with it. And so I think that I'm really, really excited whenever we get the opportunity to take a venture-backed business and dust it off and clean up the P&L and get it back to its former glory. That's really exciting. We just did that with a business called Meteor that we bought, that Andreessen Horowitz had put $50 million into. And it was a wonderful business, and it had great customers and was growing at 30+% a year, but it just wasn't growing at 100 or 200% a year. And so the business had to pivot. And when they pivoted, there was this orphan business left over, and it was really cool. We were able to buy it and re-engage the community and plug in a great team and start actively working on it again. So that's been really cool. And I think there's going to be a lot of opportunities like that over the next year or two. I think that venture, it's not that venture is going to go away. It's that venture is only going to fund the very best deals. So you see this with companies like Notion that are incredibly hot. They're growing really fast. They're in a great space. They've got all the right metrics. Those guys will be able to raise fine. But the business that's growing at 20% a year, 30% a year, 40% a year even may not be able to raise, or if it's just a slightly more challenging environment. And I think those are the opportunities that we're very excited about, where we can help them wean off the venture juice and build a sustainable business. And there's obviously pain associated with that, right? A lot of these companies have been run in ways that their P&L is just totally out of whack. And, they've done some crazy stuff. I mean, we see P&Ls of these businesses every day, and it just boggles the mind. We've been around for 15 years. For the first 10 years, we couldn't even get a bank loan. We could barely get credit cards, right? We just had no access to capital at all. And it made us incredibly, incredibly disciplined P&L operators. We had to be, otherwise we'd go to business. That was all we had. And so when I see these businesses, it just blows my mind. Like I can't believe how much money they burn, and it's staggering.
Can you take a business that's done that, right? And to be clear, I think you're saying this as well as I am, that's the model they're in, right? So it's not like they're doing anything that's malicious or bad. It's just they've been given a lot of money and used the money to grow, right? But if you have a team that has, through muscle memory, been trained to spend a lot of money and try to hit that high growth, is it possible to then take that business with the same team and kind of retrain them to go after the more sustainable model? Or like in the business that you bought, do you have to basically bring in a new team and then you can just take the actual assets with a new team and can do it?
I mean, we talk to founders all the time who say, I wish I never raised venture. This isn't right for me. I don't want to shoot for the moon. I'm risk averse. Can you buy out my venture investors? And we look at those deals all the time. In that instance, yes, because they've self-opted into that and they think so. If I had a venture investor, private equity investor come to me and say, hey, look, I own 60% of this business. They've burned through all this money and they're not in that camp. That's a totally different story. We would really have to think hard about that, because not only are you doing management change, but you're changing the business model and the P&L and stuff. What we would look for in a venture-backed business is something that is ultimately sustainable with high margins, that's simple and is still doing well despite having this crazy venture stuff going on. What kills me is seeing these businesses where the unit economics don't make sense, where they spend $5 to make $1 of revenue and then they burn $3 in operating costs or whatever. Those are the businesses we would not be interested in. The ones that I love are the ones where if you just dust off the P&L a little bit and you operate it a little more conservatively, there's a wonderful, profitable business underneath.
Yeah, the speaking of kind of these D2C companies or the high CAC type businesses, I think it goes back to our conversation with the Joe Rogans, the Kylie Jenners. Like, I think we're seeing the rise of entrepreneurs who are able to drastically reduce that cost of acquisition because they have the built-in audience, right?
Totally.
And that's where you're almost seeing the business models that didn't work 5 years ago will come back. It'll just be with a different unit economic basis. And it's because the person now starting the company will actually have the customers there rather than have to go acquire them.
Yeah, if you own an amazing, busy office building and you have tens of thousands of people in a lobby and you can start your own coffee shop and put it in there, you're going to sell a lot of coffee no matter what you do. It could be the worst coffee in the world. And I think that's what you see with Kylie Jenner is she starts a makeup brand. It barely matters. It's just branded and hot and she can promote it on her own channel for free. I think there's going to be a lot more of that happening. And again, like going back to she's done this, she's become a billionaire. I don't know what the exact numbers look like or whatever, but I think if you think about it, if she could do a digital product, right, where she can actually have true 95 or 99% margins, that's where things can get really crazy, like the Rogan kind of numbers, especially if it's a recurring revenue. Because at the end of the day, then you have the best SaaS business in the world. You have no R&D cost.
Yeah, and I guess as part of that, do you think that's where this goes? Like, do you see a world where these influencers start to get away from building merch and kind of the easy, kind of low-hanging fruit stuff, and they actually start to say, I want to build software products, whether they're mobile apps or web-based stuff, and that's like becomes the holy grail?
Well, you look at Sam Harris, he has this huge podcast. He's doing this subscription thing. And then we helped him build his meditation app, right? And it's the exact same thing. He's publicly speaking about meditation. He's written books about it and he has a loyal audience. Well, it's perfectly logical to say, hey, you should use my meditation app. You know me, you trust me, and I have this free acquisition channel. And now he's got this whole other business right there that it wasn't that complicated for us to help him. We used MetaLab and MetaLab built the meditation app and designed it. I think it was profitable relatively quickly.